Hi, my name is Andrew Pang. Welcome to another edition of CMS Forex News. Today's Tuesday, September 9th, 2008. In Australia, approvals for home loans declined 0.2% in July, slightly below the forecast. It was still much better than June's decline of 3.7%. That's now the sixth straight month that approvals have dropped. Retail sales rose in June, but barely. The 0.1% increase was also lower than forecast, but did show a marked improvement compared to the 1% decline in June. A third release, the National Australia Bank Business Confidence Index, rose 2 points to -7 in August. The improvement reflected lower oil prices and expectations of lower interest rates. Business conditions also increased but remained negative. The retail sector rebounded slightly from its very low levels last month. The Aussie-US dollar pair fell about 100 pips in the wake of Australia's data, retesting its low from Friday near .8020. Australia's stocks were down as well after their strong jump on Monday. The Aussie managed a slight rally, but was beaten back in New York's session. The return to risk aversion pressured the Aussie, which is closely linked to carry trade sentiments. The Aussie yen started the session by sliding 200 pips, recovered during the European trading, and fell yet again in New York trading. In the UK, the BRC Retail Sales Monitor showed sales down 1% in August compared to a year ago. The indicator has now been negative 5 of the past 6 months. The RICS house price balance showed that the number of real estate agents and surveyors saying prices fell exceeded those reporting gains by 81% in August. The average sales per respondent in the past 3 months fell to its lowest level since the survey began in 1978. There's no way to sugarcoat the fact that the UK housing market continues to slump and prices continue to drop. Industrial production in the UK for July, which includes manufacturing, was weaker than forecast. Output fell 0.4% on the month and 1.9% on the year. Manufacturing output fell for the 5th straight month, declining 0.2%. After the wild action yesterday, which included a 450 pip move, the pound-dollar pair settled into relatively calmer trading. The pound tested support near 1.75 and has since then fallen into an upward channel. From its low to its high, the pair spanned almost 200 pips. The pound-yen pair fell to start the session, but rallied 230 pips during the European session, as UK stocks were up for most of the day. However, before the London close, stocks dipped back into negative territory and were followed by weak performance in US equities. The pound surrendered its gains in New York trading as risk aversion returned. In July, Germany had to spend 7.4% more on imports due to higher import prices. With exports declining 1.7%, the trade surplus narrowed to 13.9 billion euros. That was below forecast, though June's figure was revised higher. In the US, the pending home sales index declined 3.2% in July, more than expected. Pending sales refer to those that have the paperwork started but have not closed. Therefore, actual sales may be weaker due to complications, such as denial of mortgage loans. Last month, the index was up 5.8% and has been rather volatile, jumping between positive and negative. U.S. wholesale inventories rose 1.4% in July, more than expected, as sales slowed 0.3%. The inventory to sales ratio rose to 1.07 from its record low of 1.06 in June. The low ratio meant wholesalers have been having some success keeping inventories light as the economy weakened due to softening demand. The euro-dollar pair hit a low near 1.4045 prior to the European Open, but managed a rally overnight. The New York Open saw oil prices drop, which helped the greenback. However, with the release of the U.S. home sales data and weak performance in stocks, the euro managed a second stronger rally that broke above 1.42. Tonight, Japan releases its corporate goods price index and current account. Australia posts a measure of consumer sentiment, and the UK reviews its monthly GDP estimate. Overnight, Japan will follow up its earlier releases with its leading index, and the UK its trade balance. Tomorrow morning, look for labor productivity from Canada and the Conference Board leading index for the UK. And that wraps it up for the day in Forex News. Join us again tomorrow right here at cmsfx.com.